Hello everybody, and welcome to the newest video.
Anyways, with that out of the way, I hope you like that one. Brand new intro I'm workshopping. I hope it's pretty good, and I hope you love it. Regardless, you know what time of the month it is. That is right. We're not talking about your female friend's time. We're talking about that's gross. Okay, I just please wipe that one from the history books. I really wish that never happened, but we're talking about the portfolio review, going over everything in the portfolio, how we performed in the month of June. And you already know, next video you're going to see tomorrow, going to be specifically covering all the dividends we earned in the month of June. It was pretty decent, okay? I'll tell you that right now. So, without further ado, you know what we're going to do. We have our main individual account here. We've got our joint account. Combined, we're looking at about $142,000 between these two accounts, which is quite nice. And you know what? I'm going to give you a sneak peek today at a little something special. I'm going to show off the Roth IRA as well. Little special hint towards our retirement account. Show you what's in there. Not as large, but you'll take a look at it. And it's not as large because look, man, they're only letting me put in 6,500 a year now. What am I supposed to do here? How's it supposed to be so large? I'm too young. I'm too young. Okay? Screw you, IRS. Um, I take that back. Please do not show them this. I do file my taxes every year, I promise. In fact, I filed them so accurately that I made an amendment, and they told me I owe them $12. I had to pay them $12. They came after me for $12. See, I'm a tax-paying citizen. I paid that. Without further ado, let's get into it. We have these in order of symbol, not necessarily name of company, but by symbol. We'll go cracking and show you exactly what's going on. So, just a headline. As you know, I definitely have a decent focus on dividends. Obviously, this gain doesn't necessarily include dividends, right? We've got a $5,160 of annual dividends here on this on these two portfolios combined. Obviously, the one being a little bit smaller, the one being a little bit larger. And that's right, 5,160 combined annually. It's spread out pretty even. Now you do see there's a March was a pretty big payout here. There's no doubt about that. A little bit of hefty. It kind of didn't spread out well between February because the shorter month. So but overall, it's relatively spread out. Um, and on average, we're looking. Looking around somewhere around the $400 range a month. I mean, somewhere around there. Yeah. So that's that. So let's get into these bad boys because there's a lot to cover, and I know it's going to be a long video, and I hope you stay in for this entire thing. And if you do, I love you. Anyways, first off, we're going with Happily Dappily, one of my biggest holdings here. Not much change here. Oh, by the way, and you see this, as of now, up 20% on this one, $23,237 on that bad boy. Now, Apple, not much has changed here, as you see, 50.4256 shares. We'll just round those up, obviously, 50.43. You see we're still up big on that one, up around 176%. We're in at $70 a share. We've had this one forever. It's 7% of the portfolio. We've had that one quite a while. Now, AbbVie, following them, and we love having Apple, by the way, 10.29 shares here, while this one is bolstering a $303 gain. It's the equivalent of about 28%, so nothing crazy, only 1% of the portfolio, nothing massive. It's been a good performer for us here and pays a nice dividend of around 4%, so I'm not too upset about that, all things considered. Arbor Realty Trust. Now, this one's had a great resurgence since last month, as you've seen. If you look at last video, I believe sometime it was probably around $11 or $12 a share at that time when we recorded the last video for the monthly recap. Ooh, whoopsies. We've got 201.63 shares. Obviously, a pretty decently sized position, about $3,000 worth. And it's one we're up pretty nice on, right? About 26% roughly. Cost base at about 1180, so we're up nicely. But this one, the good thing about this one is giving me a 10+% dividend. So the fact that I see any capital gain is pretty exciting for me, right? I get a massive dividend payment for this that, by the way, all the dividends get reinvested, as you know. They all do. it's pretty exciting. So definitely like to see it. Now, then we get into AMD following them. AMD, we've just got the 15 shares here, uh, which is nothing to sneeze at for sure. A little bit over 1% of the portfolio, but we're up pretty decently, about 37% or $463 on AMD. So we're pretty pleased with that total position. How that one's grown. The stock itself has done incredibly well over the last several months. Really should have brought a beverage in here to drink because this throat's going to get dry, folks, and you don't want anything dry like that. Amazon, 15.19 shares. We're rounding up to the nearest freaking thousandth, hundredth. Anyways, sometimes the brain just freezes on you and you don't know what to say. 1.4% of the portfolio, up about 10% on Amazon. Nothing crazy. It's not been a great performer this year, all things considered, over the last really 52 weeks. It's been down in the dirt. Finally getting some recovery there, which we'll take. But geez, Louise, we've been hurting on that one. Then we get into Apple Hospitality, 114.81 shares here. I am up a little bit in capital gains, about 11%. So I'll take that. It's about just a little over 1%. Most of these are going to be around 1% of the portfolio, just so you're aware. Besides a couple of the big ones. Now this one again, it's nice because it pays on a monthly basis an 8-cent dividend per share, which represents just over 6%. Which, hey, if I don't get much share price appreciation and I can earn 6%, 6% annually just on that dividend and actually reinvesting it, which means I actually earn more than that on a compounding standpoint because my dividends keep getting higher and higher and higher, baby. That excites me. So that's what I'm in this one for. And you see dividend reinvestment's big, and I'll definitely show you that in our dividend video. Apollo Commercial Real Estate, ARI. 178.48, another one of these REITs. We are actually just slightly down, only 0.61% on this one. Now, it does yet again yield around 12%, so it's a big yielder, and we've earned a lot on this one in terms of dividends. It just doesn't reflect necessarily in the overall gain loss, but you know what? Annualized, I'm making 10+% on this. I'm not too upset that I'm not actually showing much capital gain, and I can reinvest those shares at a cheaper price too, which is nice. Activision Blizzard. Now, this one definitely has seen some good resurgence in the last month as well. 15 shares here, mostly because the release of Diablo 4 seemed to be pretty nice for them. We are up around right around 10% here, $114. Nothing crazy. Relatively small position, all things considered, but it's been nice for me. Bank of America. Now, this one's been an absolute piece of garbage, an absolute stinker. Screw this thing, stinking up the place. Anyways, we got 44.71 shares here. We're talking down $131 on this position. That's right, or right around 9.25%. Really just painful there when you see something like that. So definitely not a great performer. The financials haven't been performing well this year, so I'm not shocked. Man, feels like this thing's cheap under $30 in my opinion. That's why I've been actually adding on to it a little bit here, but might add on to it a little more actually too. Citigroup following them, another financial. What a shocker! I'm down on this one too. Pretty small position though for me, only 18.47 shares. I'm down around 7% here. Down $64 roughly. It's painful, but that's okay. Next one, we go to Carnival Cruise Lines. Now, this one has been a pain in my tuchus, and you want to know why? Because last month I told you specifically I'm selling covered calls on this one, and what a shocker. The second I sold covered calls, this thing went from the most stagnant stock ever to up 100% in the span of 2 months. Right now, bolstering a $18.83 share price. This thing was at $9 at the start of the year. I mean, it's up over 100%. And it didn't move until freaking May when I sold these covered calls. So once again, it has blasted through my covered calls strike price at $17, which was very out of the money when I sold it, by the way. My hope here, now what's the play? That's the thing you got to consider, obviously, because With this covered call, I'd have to sell it at $17 a share. Let's just hope I don't get assigned. On the stock itself, if I didn't have to deal with that covered call, I'd be up, 60% here, about $710, which is nice. Now, my plans for this covered call, here's what I'm going to do. Yeah, this is what I'm going to do here. So I'm going to hold on to it. I may postpone it into a leap option, potentially one that's closer towards the start of the year, probably a January expiration at a higher strike price, and hopefully I can still, not have to worry about paying any additional premium. We'll see what those pricings look like, but let me tell you, just freaking Friday alone, this thing shot up $1.67 a share. It's like what the F is going on here, guys? Great if I was just holding the stock just to hold it, but now that I was trying to actually sell some covered calls, I didn't really want it to shoot past that. But hey, if it sells, it is what it is. That's all right. Costco, following them, 3.02 shares here. Doesn't seem a large share count, obviously, but that's okay. You want to know why? Because it's a big share price. Still a big position here, all things considered. I am up $316 or 24%. I will take that one with Costco all the time. I love it. The stock just continues to outperform. It just does what it does. Cisco Systems following them. Not a massive position here either, but really because I haven't bought into it at all, and it's just been only relying on their dividend to really grow anymore lately. 18.4 shares here. How's that double roundup for you? Oh, baby. Um, right now equating right around $131 gain or 16%. Really nothing massive. Just there, it's there to be consistent. You got to have those in your portfolio. You really do. Um, following them, we've got Disney. Now this one's an absolute piece of trash for me here. Disney has been just destroying me, and I'm upset about it, okay? 30 shares here of Disney. I am down $860 or 24% on this one. That one has been a stinker. Remember, I used to be up massively on this one. You look back at old videos, I used to be up massively on this one. You know what? I'm down big now. Back when this thing was $160 a share, I should have sold it, apparently. Then we go into Domino's Pizza right for them, $4. What? 4.03 shares. Big share price here as well, so obviously not too bad. I am down $132 or 8.9%, so pretty not good there. But you know what? I like it over the long term. It's a consistent play, and it does what it does. I'll take it. Then we've got Ford, 160.78 shares, which may not be that way for long because you want to know what? Guess who sold the covered call on this one as well? Now on the stock itself, I'm actually up 61.63% or $927. Now, this covered call, I'm probably going to have to draw it out, unfortunately, because I had it for July 28th, a $15 call, and it's obviously right above that. It's in the money right now. So there's definitely a chance that I have to sell that stock at 15. I don't really want to, so I'm probably going to roll out that position. Probably to something like a $16 strike price for, at this point, I'll see what August holds, probably August, and I'll probably still be able to collect a little bit of additional premium. And I don't think this thing's reaching $16 in August, to be honest with you. Now, Gilead Sciences after them, 15.59 shares, one of my few biopharmas. I am up 21% on this one, or $208, so we'll take that as well. Gladstone Capital, 97.03 shares here. We are up on this one, just $43 or 4.7%. Now, again, a big yield on this one. As you can tell, one of these classic REITs here. We will take that all day. Around a 10% annualized gain, obviously, with the dividend included, so that's plenty fine. Home Depot, just a 2.0. Oh, sorry, I skipped right over Google. Or Alphabet, as you know, 10.18 shares there. I am up right around 25.6%, or the equivalent of $248. So I'll take that one off my share count there. Not too bad. Home Depot, 2.034. That's right, I add that in there. How'd you like that? Shares, I have 35.91%, or $166. Not too bad. HPQ, this one's been pretty decent for me here. 26.72 shares here. I am up $130 or just about 18%. It's been okay for me. Pays a decent dividend. We're all right with that. Hercules Capital Incorporated. This one's been okay. 111 shares here on this one. I am down overall, actually $40 or the equivalent of 2.4%. Does yet again also pay a 10% yield though. So all things considered, I'm actually decently up on this one, but it unfortunately doesn't show on the share price. So, and that's all that people care about sometimes. So let's be real, it could be better. IBM, 5.25 shares here for IBM. I am up around $98 or 16%, so nothing crazy. It's not a massive position, but we'll take it. Intel, piece of garbage here, 17.73 shares, down $296 or 33%. Really should have sold it before it had this most recent just devastating crash of the stock price. It's been a piece of garbage lately. iRobot, we've got 10 shares there. That one, no dividend on that one, so it's kind of upsetting because I'm down actually $62 or 12%. Off of a pretty small position. I'm still holding in for the acquisition, so we'll see. Iron Mountain following them. Another one of my REITs, but not as high of a dividend payer. But where it doesn't make up in that, it makes up in the freaking share price gain quite significantly. 60.2 shares here. I've had this one forever. I am up $1,431 or 71.96% on this position. That's crazy for a REIT to see that kind of share price appreciation, and I do love it because it's, it's really nice to see. Coca-Cola after them, 14.27 shares here of Coca-Cola. I am up $95 roughly on this one, or 12%. Nothing crazy, just again, one of those rocks of the portfolios you have in there just to be consistent. And just sit there and have a good time. Now, Kohls, this one's also been a stinker, 81.95 shares. My goal here, I will be acquiring more Kohls in order to get to 100 shares and also sell covered calls on this one, too. I think there's a decent income strategy on this one with some relatively decent premiums I could take advantage of here. So Kohls is one that I definitely will be acquiring 100 shares of here in the near future so I can sell some more covered calls, get some more income. That's going to be my goal here, folks. I don't know what's going on there in the bottom right. I guess you can't see that. Steam's sending me notifications. I thought I had turned off, but I guess they switched that. Down 437 on Kohls, $437 or 18.8%. Kind of painful. That's why I want to sell some freaking covered calls, get some extra income from this bad boy. Does pay a nice dividend right now too. So if I could earn that nice dividend plus a little bit of those covered call incomes too, that'd be nice. Lockheed Martin, 1.01 share here, nothing crazy, small position. Down $12.50, or that's the equivalent of 2.62%. Nothing crazy. It's a very new position for me, so I'm not too upset about that one. Lowe's, 2.02 shares. Kind of crazy, pretty close to what I have in Home Depot, but Home Depot obviously has a larger share price. But on Lowe's itself, I'm actually up 52.87% or $157. We'll take that. Main Street Capital, 48.04 shares. I am up 14. Let's just round that to 15%. Up $250 on this one, plus a nice 7% yield. It's been a pretty good one for me, Main Street Capital. Meta Platforms, you might know them as formerly as Facebook. 32 shares here. I'm up massive on this one. I love this position. 55% or $3,263. I'm very happy with that position right now, and I think it's headed for some more growth here as well. 10.38 shares here of Microsoft, another position I'm very happy with here. Why is that? Because, well, I'm up 113% in Microsoft, or $1,879. That thing's been a beaut for me. Just wish it was a little bit larger of my portfolio by the time that it really took off. But that's okay. Micron had a fantastic day a couple days ago. Not a good day on Friday. 10.06 shares. I am up $178 or 39%. We'll take that all day. Neo, why is it shortened like this? That's weird. But anyways, obviously it's the ADR share. Neo, 25 shares here. You know this one. I've actually had it since the infancy of the account. $1.53 per share is my cost basis. So I'm up $203, which isn't crazy, but that is the equivalent of 532%. And it's gone down massively, so I'm just holding on to it because why the heck not? Who knows what's going to happen with that one. I don't care. I sold the majority of the position out at a pretty big gain, around $16 a share. So we'll be all right with whatever happens there. Nvidia, what a beauty here. What a freaking beauty Nvidia's been. 6 shares here of Nvidia. I am up 467%, or $2,092. Nvidia is just ridiculous, brother. I mean, this thing's been doing crazy stuff. Most recent price target just added at 475 too. So if it goes, oh my gosh. Oh my gosh. New York Community Bank after them, 47.83 shares here. We are just slightly up on this one. I was down for a good bit there, 6.79%, or $34. We'll take that. Pays a decent yield there. And I know they just recently got Signature Bank assets as well, so something that could really drive that share price up potentially even further. Pretty excited there. Realty Income, symbol O, the monthly dividend company as you know them. 53.13 shares. Not actually up massively here, only 0.85%, $26. Does pay about a 5% yield, so it's not been actually crazy for me. The main thing is, hey, they pay a monthly dividend. They continue to increase it every single quarter. They're increasing that monthly dividend. So that was a squeaky chair. I hope you heard that. Then we got OHI, Omega Healthcare Investors. 90.53 shares here, 0.54 if we're rounding up. This one's a massive dividend yielder as well, around 9%. On the stock itself, only up 4.74%, or $125, so nothing crazy there. It's a decently large position here for me, obviously, but hasn't been great in terms of share price, and I think that's fine. It's been worse, and it actually went up quite a bit here in the last month, about $2 a share, so we'll take that. Penn Entertainment, 25 shares there. Kind of just holding on this one for hopefully a pop in the future with a betting play, because I don't really have any sort of betting plays here in the account. And sports gambling is going to be legalized in more and more states as we continue to go up here. So that's why I'm holding on to it. 35% down, or $328. So that's been an absolute piece of garbage, right? Been a terrible piece of garbage, but that's okay. PepsiCo, 5.09 shares here. Up $133, or 16%. Nothing crazy on that one, but that's all right. Schwug Power, a little bit of plug power here. They're 8 shares, pretty trashy for me, down 57%. Definitely my worst performing in terms of percentage stock. 57% down. Again, I used to have this one at a much lower cost basis. Then I sold all the position at a pretty decent gain. Then I bought back in, and made a decent gain on most of those shares. I kept some residual shares to see if it would keep going up, and then it just kept going down, actually, so that sucks. $111 down there. Prospect Capital, 298 shares, 298.47 shares, to be frankly honest. Down 10%, or $204. Another one that yields around 11% annually, so I'm actually up pretty decently here on this one. And with the share reinvestment, that's pretty exciting too. Keep getting more shares at a cheaper price. It's not bad. Qualcomm, 5.13 shares on Qualcomm, up $76, or 14.24%. I think I read that wrong. No, I didn't. Rhythm Capital, another REIT, 185.1, really $0.2, 185.2 shares. I am up just 0.21%, so I'm basically break even on this one. In terms of share price, it is a 10% yielder as well, so it's been pretty nice for me. Starbucks, 10.22 shares. I am up 26% there, or $211. Charles Schwab, been a bit of a stinker, 15.16 shares here, up 1.11%, or under $10, nothing crazy there. Stitch Fix, another one I've sold a covered call on, actually, which this one's gone to plan. Stitch Fix, I am down 52% in share price, or $423. Now, this covered call I sold, obviously, really only made, this is a $5 strike price call, because this thing's a piece of garbage, and I know it's not going to reach it. So, in all honesty, I went ahead and just sold the F out of one of those covered calls, and it's been actually pretty good for me. I made around $35 on selling it, which is okay. Obviously better than the $0 it's earning me in terms of share price. So That's all right. There we go. Little cough. Shopify. 60 shares on Shopify. This one's been an absolute beaut as well. I am up 38% or $1,078. Stanley Black & Decker. It's been all right. 10.3 shares here, up $43 or 4%. Target, 10.29 shares, up $135 or 11%. Could be better, could be worse. Tapestry, I'm at 30.98 shares here on this one, up 94%. Or $644, and it pays a decent about 3% yield as well. Not too bad. Tesla, we're up pretty big on this one, obviously, actually, quite massively. But I only have the 1.3 shares here. I am up 88% on this one alone, or $159, so I'll take it, all things considered. Texas Roadhouse, you haven't seen this one before. This is a brand new one to the portfolio. We just added Texas Roadhouse, 9 shares of Texas Roadhouse. I'm already at 4% actually in the span of just a week, or $38. I'm not here for the short-term gains. I want Texas Roadhouse long-term. I really do. Vici Properties, 51.87%. 51.88 shares, up 6.84%, $104 up on that one. We'll take that all day. Walmart, here is our biggest position. Actually, is it right now with Apple? Oop. Let me see. Is it right now with Apple? Yeah, it is. It is. It is not compared to Apple right now. Sorry. No, it is the biggest position. I just lied to you. Anyways, Walmart right there. About $10,000 in this position alone, so pretty big. Now I am up 46% or $3,206 on that one. Pretty nice for Walmart. It's been doing great things for me off my 64.5 shares. We get into the ETFs. Not really going to look over, profit loss on these ones. In my opinion, it's just ETFs, nothing crazy. I buy most of these. Most of these are dividends, and basically just to kind of keep the portfolio stagnant where it's at. So first, we've got the Wisdom Tree Small Cap Dividend ETF, 10.28 shares there. The iShares Core S&P 500 ETF, talk about basic right there, 2.03 shares. JEPI, you know that one, you love it. 47.23 shares there. That pays a good dividend, let me tell you. JEPQ, another good dividend, 23.32 shares. KBWD, the Invesco High Dividend Yield Financial ETF, 106.51 shares. Another one that's focused on dividends. Piece of garbage in terms of stock price. The next one being Invesco Premium Yield Equity REIT ETF, 79.9 shares there, piece of garbage there in share price, but pays a good dividend. MGC, the Vanguard Mega Cap ETF, 4.05 shares there, nothing crazy. QYLD, Global X covered Kohls NASDAQ 100 ETF, 50.84 shares there. SPHD, the Schwab US Dividend Equity ETF, 44.45 shares. SPHD, the Invesco S&P 500 High Dividend Low Volatility ETF, 44.64 shares, pretty close to that one, let me tell you. SPYD, the Spider S&P 500 High Dividend ETF, 25.06 shares there. SPYG, the Spider S&P 500 Growth ETF, 17.18 shares there. VFH, the Vanguard Financials ETF, 10.19 shares. VYM, the Vanguard High Dividend Yield ETF, pretty good one actually. I like that one. It's pretty decent. 14.37 shares. And then XYLD, you've got 18.3 shares here on the Global X S&P 500 covered call ETF. Now, then we get into a couple fixed income instruments. We've got a JP Morgan Chase 3.2% CD, $2,000 into that one, a 4.25% CD from JP Morgan Chase, a 2%. Microsoft, a 2% note, which is actually coming up here in August 8th is when that one's due. I'm excited for that, to get that extra $2,000 back in the account to use it for something else. Then most recently we added a Truist Bank 5.3%. 1 year CD is what we added here last month here in June. So, hey, 5.3% on a CD, I'll take it. Just $2,000 into that one as well. And then finally, on this money market fund, this Schwab Value Advantage Money Investors Fund, um, right around a 5% yield here on this one too, fluctuating with interest rates, so probably going up. $4,724.84 in that one as that's up. Real quick look into the joint account where we're at right now. Nothing crazy here. Apple still one share of Apple, 2.06 of ABR, pretty small one there obviously. Ford just 3.07 shares there. Meta, the one share, which is up actually very massively. Let me tell you, on that Meta position alone, up 67% based off when I bought it. Pretty nice. Microsoft, one share there. Realty Income, two shares. Vici, two shares. The iShares Core Dividend Growth ETF Grow, 5.06 shares. JEPI 4.12 of that one. QILD 6.09. SCHD, we've got 6.1 shares there. 2 shares of SPYD. VIG, the Vanguard Dividend Appreciation ETF, I've got 1 share there. And then XLF, the Select Financial Select Spider ETF, 5.04 there. And then a UMB Bank 5.3% CD on that one as well, which was a 1 year as well, new addition there. Just $1,000 I put into that one, I should say. My apologies. So hey, that's all right. $53 of earnings on that one. Then $1,127 in SWVXX as well. Then here's the moment you've been waiting for. That's right. The as you know it, this goated Roth IRA here. I hope you're excited. About $32,000 in this Roth IRA. Hope you're excited on this one, and let's get right into it. Just gonna go right into basically just the positions there, and we'll go from there. Apple, 20.1 shares here. Definitely the second largest position I have in here, and it's I was just kidding. I have some of those ETFs which are larger. In terms of stocks, this is the second largest I have, but don't have many stocks in here because it's a Roth IRA, mostly focused on actual tracking the market as opposed to individual stock picks. So that's kind of where you're seeing that. And as you see, my stocks are performing way better than my ETFs too. So, but anyways, 20.1 shares of Apple. ABR 25.86, like 25.82, like earning that dividend at a very cheap. Don't have to pay tax on that. Pretty nice. Ford, 2.04 shares there. I don't know why that. I mean, that's just the smallest position ever. I'd like to build that up if the shares get a little cheaper here, and I'm hoping they do, for my covered call's sake. Microsoft, 12.11 shares there. Realty Income, 25.5 on that one shares. I am down on that position, actually. My only stock I'm down on, which is kind of disappointing, but that's okay. ITOT, the iShares Total Stock Market ETF, 30.4 shares there. Obviously, pretty big position. Trying to track the market. JEPI, trying to get that income on a tax-free basis. 53.7 or 5.8 shares. QQQ, you know them, just the Invesco. QQQ Trust ETF there. 10.06 shares. SCHD, we've got 29.91 shares. SPY, Spider SP500 ETF, 10.12 shares. SPYD, 41.94. VIG, you saw them. 13.17 shares there. And then VYM, you saw them as well. 17.52 shares there. A lot of this has been purchased as of this year, so some of these are down pretty bad. So let's just be real here. There's some struggles. Over the long term, I feel good there. And what that's going to do. So that's our Roth IRA. Hope you're excited about that. That's everything I have for you in this video. So I hope you're excited. We showed you everything in these accounts. All the way from this $32,000 Roth to the $4,000 joint account we have set up with a lovely fiance, and then the infamous, the main portfolio, $136,000 here on this one. Let's go, baby. I hope you're excited. Tune in tomorrow for the every dividend I earned in the month of June. I'm here to be transparent for you, okay? Let's have a good one.